Welcome to Friday Takeaway. This week I look at two companies involved in the auto sector. One is squarely in the middle price bracket as the official distributor of Mazda cars. The other is a dealer in high-end Mercedes-Benz passenger and commercial vehicles. But we start with Hong Kong, where a standoff between ordinary people and the city-state's police has intensified over what its locals see as China's encroachment on its legal autonomy. Central to these protests are a widely unpopular bill that would allow the extradition of alleged criminals to China from Hong Kong, which critics fear will be abused by Beijing for political ends. As many as 1 million people have taken to the streets in Hong Kong's biggest outbreak of public unrest in years, irked by what is seen as a move by China to bring the former British colony closer to the mainland, and quite possibly the end of the ages-old one country, two systems ruling style. The World Trade Organization has warned that a full-blown trade war, where tariffs were to go back to levels that existed before the multilateral trading system was created, would see global trade plummeting some 17% more than during the Great Recession of the late 2000s. Keith Rockwell, Director for Information and External Relations at the WTO, said recent trade restrictive measures have been of the magnitude not seen in years, noting that he sees rampant uncertainty, stalling manufacturing output and falling export orders, none of which bodes well for economic growth. Bursa Malaysia Chairman Dato' Shireen Muhyiddin has urged CFOs, Chief Financial Officers, to be brave enough to voice out any wrongdoings in the companies where they work. She said that CFOs are the gatekeepers of their company to ensure transparency and to instill investor confidence into the industries and capital markets, she said, adding that governance is the baseline of transparency and that transparency will instill confidence and investment in Malaysia's capital markets, whether it's long-term, FDIs or through equity markets. And former badminton world number one, Dato' Lee Chong Wei, has announced his retirement from professional badminton after an illustrious 19-year career. Chong Wei, diagnosed with nose cancer in July last year and a 3-time Olympic silver medalist, said doctors told him he was left with no choice after recent consultations, and he is therefore no longer able to mount a final assault on the All England title this year, after having won it already 4 times previously. In this week's This or That, I look at two companies that are involved in the automotive industry. One is the sole distributor of Mazda passenger cars in Malaysia, and the other is a seller of Mercedes-Benz passenger cars and commercial vehicles, i.e. two car companies with a very different price, product and customer profile. So let's find out more. Bermaz is the sole distributor of Mazda passenger vehicles, spare parts, accessories and tools in Malaysia, under an agreement originally inked with Mazda of Japan in 2008. Bermaz, which also sells Mazdas in the Philippines via a 60% owned unit, is a darling among fund managers, counting such names as the EPF, QOP, PNB, Principal, Vanguard and HSBC among its institutional investors. While Bermaz has had a bumper year, posting record net profit for its full financial year in fiscal 2019 that jumped by 90% to over 265 million ringgit, while revenue was up by 25% to a shade under 2.5 billion ringgit. It also declared a 4th interim dividend of 3.5 cents per share and a special dividend of 7 cents per share, payable on July 25th. And to keep the momentum going, Bermaz said it expects the launch of the all-new Mazda 3 and SUVs like the CX-8, CX-30 and a facelifted CX-5 to mitigate the challenges that could dampen consumer sentiment in the second half of this year. Next year, Bermaz won't benefit from another zeroization in the GST, which is the Goods and Services Tax, which it admitted was a major reason for its record performance this past year. And sales from its Philippine operations remained an uncertainty after being impacted by the tax reform for acceleration and inclusion, aka TRAIN, law during the fiscal year in that country. Plus, there's also vicious competition from national and non-national marques like Proton, Honda, Nissan, Kia and Peugeot, all of whom have comparably priced SUVs vying for sales like Mazda. 14 analysts cover Bermaz according to Bursa Marketplace, with a median target price of 3 ringgit and 6 cents. 6 are a strong buy, 8 are a buy, and none are a hold, reduce or sell. And that means a potential 22% gain lies in store. Hap Seng Consolidated Berhad is a diversified group with 6 core businesses, namely plantations, property investment and development, credit financing, automotive, trading and building materials. I'm talking about them today because, like Bermaz, they are also automotive players, with Hap Seng Star, a dealer of Mercedes-Benz passenger cars, and another unit called Hap Seng Trucks Distribution, the sole general distributor of Mercedes-Benz and Fuso commercial vehicles, both in Malaysia. They've got 11 Mercedes-Benz passenger car dealerships in Malaysia, and they also own the largest Mercedes-Benz certified pre-owned centre in Malaysia, in Puchong. Large diversified businesses like Hap Seng suffer from what analysts call a conglomerate discount, because there is no single core focus on which to precisely value the business. As a result, Hap Seng's well-performing car business, which is roughly a fifth of overall revenue, is also held within an entity that includes a plantations business, which is enduring one of its worst downturns in recent history, and an equally weak property sector, another of Hap Seng's businesses. Sales of Mercedes-Benz cars have been going through the roof in recent years. They are and continue to be the best-selling luxury car brand in Malaysia, thanks to a galaxy of well-designed, high-performing and fuel-efficient models that feed into just about every market niche in the country. In its annual report for 2018, Hap Seng said revenue at its car business increased to 1.4 billion ringgit and record operating profit of 31 million ringgit, 14% higher than the previous year. Unfortunately, no analysts cover this 24 billion ringgit company, though their shares are currently in the middle of their 52-week trading range of between 927 and 1020. Its price-earnings ratio is currently at about 21 times earnings and has a dividend yield of around 3.6%.